Hey, good morning, everyone. Aloha, Cisco. Hey, Tibby. How you guys doing? Hey, Badir. How are you? What's up, Alexander? Alrighty. Hey, AO. What's going on? How's London? Getting better. Getting better. I think it's starting to dry up. Thanks for asking, Badir. Hey, Moran. How are you? Good, good. So, what do we have today? Yesterday we had a nice move up from the lows. We found the bid here sort of underneath 69.83 and then closed. I think we had a 7,000 close or close to it. And I said that to watch out for a backfill at nighttime. And what is a backfill? Well, when you take a market up, you create demand, then you go back and you fill that in. So, anybody who bought product up here got to sell it up here. Now it's back on sale. And I said, watch for 69.83. Our low tonight is 69.83 and a quarter. So let's see if that low holds. If when London opens, that's really what we're looking for. Those of you who are short biased, that's natural. Just be aware of one thing. These lows have been consistently moving higher. So the lows of the last four sessions are moving higher. Something to consider. The other thing to consider is that we move the market up, we break, we move the market up, we break, and overnight inventory is probably about 80% short. Hey Dan, how you doing? Hey Kevin, Marcus, Ian, how you guys doing? Liverpool is amazing. Heyo. It's another beautiful morning in Liverpool. It's always sunny in Liverpool. That's my new TV show. Little take on Always Sunny in Philadelphia. So the lows are getting higher over time. Uh, Ranges are still fairly big. What's the big news today? They raised margins again, right? So it's $600 to trade the micro and 6 grand to trade the mini. What's the big news event today? What do we got on tap here? Retail retail sales, core PPI, Euro. A bunch of news at 8:30. One sec. Home sales at 10. And then we've got the Fed wrappers at 12, 12:30, 11, 2. Oh, it's like two live crew. All the Fed wrappers. There's four or five of them today. Tomorrow we got jobless claims. Okay, so it's a news-driven week. Let's see how it shakes out. Data. Data that I never look at, right, Alexander? I'll let the chart tell me what the data is doing. Oh, okay. So inventory is short, and this short inventory business is confusing a lot of people. Let's simplify it. Inventory is short, yeah. See, it's just a simple way of keeping track of what's going on. See, the market closed here, right? The bulk of the trading, 70-80% of it, is underneath the close. So we say inventory is short, okay? What does that mean? That means eventually, in normal, quote unquote, normal business conditions, the move is up to correct inventory. Hey, Jerry, how you doing? I owe you a phone call. Call you right after the session if you have time. So we get a move up to correct inventory to the upside. Now, if we closed here and all the trading was up here above the close, we'd say inventory was long and we'd look for a corrective move down. Now, why the correction? Well, that's just how markets work, right? And most trading rooms, if you go into them, won't talk about inventory because they don't know what it is because they've never traded it. So they're kind of trading in a bit of a vacuum, right? It's kind of like, I don't know, it's like being a dentist and really not understanding how the teeth are held in at the roots, right? So it's a fundamental business concept, which a lot of trading rooms never talk about. They don't talk about it because they have no clue what it is, right? Because they've never worked in the business or, understood that the business is a market, right? It's kind of, it's daunting because there's so much information about trading, and about 80% of it out there on the internet is fake or false or constructed to sell you something. So what we try and do at the Trading Syndicate is we try and cut through all that BS and show you how a market works. Once you understand how a market works, you can actually see it happening on a chart. And it makes things a bit more clear. Then you have to figure out how to do business around the mechanics, right, of what's going on. Very simple. But it's not easy. That's why we try and keep things simple. So if we know that inventory is short, we're looking for a move higher. Also, we know that my target of 69.83, it's held so far. So what does that tell us? That tells us that the selling that takes us down to 69.83 is sort of like light. It's not heavy size. If there were size traders, right? Say there was a news event or, somebody came in with some pretty decent size. We've only traded 47,000 contracts, maybe 48,000 contracts tonight. So if you came in and you went to that 69.83 level, right? And in the business, we'd say, show them some size. So you go to 69.83 and you go, hey, I'm going to hit you with 5,000 contracts. That'll break. That'll just, in a New York second, that'll break, right? So that means the selling that takes us down there is very light, right? Think of a ballet dancer versus a clog dancer, right? A ballet dancer kind of floats. Clog dancer will break that level. That's a big size order. We'll take that out. So that tells us a lot about the market right now. The other thing we're going to go take a look at is this market profile stuff. There are a couple of things. This J period usually corrects inventory lower. You'll notice that it opened, it corrected lower, hit that 86 level. The initial bid was here at 83. Then it moved up here to 83.5. And then over an hour and a half period, because these are half-hour bars, the bid has moved higher. That's market intelligence you could use, because you don't want to be shorting down here, right? Now, everyone has shorted in the hole, which means they think about shorting here, they miss the opportunity here, they finally get it together and execute here, then they get stopped out. Sound familiar? This can help us from doing that. Because if you're stalking a level and you see the selling stop one tick before that level, the sell orders are done for now, right? So in 17 minutes, London's going to open. Let's see if London can take out the 88s and the 86s. Because if it can't, and inventory is short, we are going to get a move to the upside. And that is how you can manage your expectations when you're breaking down a market. Okay? So this market profile, for people who are just joining us, it looks like the Matrix, right? It looks pretty freaky. I remember when I saw it, I was like, what in the hell is this? Right? And I looked at it, but the one thing I noticed about the guys who were using it, and it was back in the day when Peter Resnicek and Brad Agutis were on Shadow Trader, they had a half-hour show at lunchtime. I used to watch it religiously. And I stumbled across it. And the reason I listened to them because they were the calmest dudes on the show. Everybody else was hyper caffeinated, and they're like da 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 da. And the options people were just talking like gibberish. I had no idea what the hell they were saying. Very smart people, but I just, they were talking about iron butterflies and upside down burning. I had no idea what that stuff was. So when I talked to these guys, Resnicek said inventory, and I went, aha, right? And they were so calm, right? Then I started, looking at this market profile, and at first it really hurt my head. You'd get like an ice cream headache when you watched it because you're not used to looking at things like this, right? We don't use this in school, right? Basically, it's a distribution, it's a statistics distribution curve, which is this, right? Like a bell curve, not the greatest bell curve, but you take it and you flip it on its side to see the distribution. That's all it is. So it's a very interesting concept. It gives us really good information like where the stops are. Now, if you don't have market profile, you could use a half-hour candle chart, right? But there are certain things, like you can look at a low, you can see if it's a poor low. That's not a poor low. That's got 2 ticks of excess, so it's not a poor low. But you could definitely see that there was a bid there, right? Now, when M period looked below 69.83 and failed, because it came down here, I'm sure a lot of people got trapped short here, late day shorts last night, right? So they're bid to cover here. So when London opens, let's see if we take out your first downside reference is 69.86, okay? So now this is like a map of the city. We know what neighborhood we're in. Now we go and we use a 1-minute candle chart to find a balance area, right? And when we find that balance, and I'm still kind of like, I don't know about this balance zone. I'm trying to see where it kind of washes out. And I'm looking here at 85 and 3/4 to 89 and 3/4. Now what this is a cost basis. So if I go and I draw a volume profile, you'll see there's a big chunk of volume here, right? Because what's going on is the market is liquidated. The people who are above 69.90, they're trapped long and they're puking it out. It's being puked out into wholesale hands, right? First the shorts come in, then the wholesalers come in, then we come in. Now enough people short in this area will do one of these and correct overnight inventory, right? Kind of simple, right? But you have to take some time and watch markets to be able to figure this stuff out. First of all, you have to have good information. If you don't have good information, it's very hard to trade because you're trading on false information, right? And when you're trading on false information, dear God, it's difficult. It's really difficult, Like people who are like, oh, all gaps fill, let's short, right? That doesn't work, right? All gaps fill depending on the order flow, right? Like you got a cold too? How'd you catch a cold? You never leave the house. Just kidding. Just kidding. Just kidding. Yeah. Sorry, brother. I get to joke with Mikey. He's ex-Wall Street. Okay. Alrighty. So this is your cost basis. You double it down to find your discount zone. You double it up. This is your profit area. Very simple. I've put the halfway market here because the zones are a little bigger. So VWAP's at 69.93. I set my VWAP at the Globex Open, which is the session open, which is 6 p.m. Eastern Time, 11 p.m. where I am in UK. And now we just sit and wait. So that's how you do. You go and you find out where everybody's positioned, right? Because you're a trader and you're trading a product. That product is inventory. So we need to know, like, if you're selling cars, you got to know where everybody else is pricing the product, right? You got to know where the buyers are, the sellers are, and where you should price your product to do intelligent business, right? Make sense? You can't do proper business if you don't know where to price your inventory, right? You're going to be a little, discombobulated. So let's see. First of all, you draw this out and you sit and watch and see whether the levels work. So now we know that there are sellers here, and let's see if we stop selling at the middle or at the bottom. If that works, then we can do some test trades, right? Hey, Raj, what's up? Okay. So what are the trades we're looking for? So say, for example, I had done this a little earlier. I just did these. So we like trading from the outside of the zone in. So if you were short, right, if you saw there's a seller at the J high, right, you'd be shorting here at 89, right? Your stop would be 90. Or if you were feeling like Daddy Warbucks, you put your stop at the top of those candles. So you're short 89, right? And you put some bids down here around 87. Put a bid there, you put a bid there, you put a bid there, and you put a bid there. And if the market hits those bids and fills them, then you know that there's supply. If your buy orders don't get filled, then you can start cutting your risk, right? So what I do at Agnostic is I looked for, here I was looking at, where is it? Actually, this balance zone is off by a couple of ticks because I should have been using these two highs and then these lows, and then we look above that high, we should come right back to that low. I'm a little off today because of this. I could redo this, but let's see if it works, right? No problem, ACS. Yeah, if you're not feeling well, if your head doesn't work, just take the day off, right? Don't put money at risk. Have a good one, right? Hey, Blues Queen, good to see you. Your buddy made $30,000 in 2 days trading silver and lost it all since the Asia Open. Wow. Which chart do you not know that I can decipher? The candle chart or the one on the right? Because the candle chart's pretty freaking simple. You just look for a seller. You guys really overcomplicate a lot of stuff. The reason why you guys can't understand what I'm doing is because it's the most simple thing. Oh, the right one. Don't worry about the right one. It's just a fancy half-hour candle chart. This is called a market profile chart. And when you first look at it, it's going to hurt your head because it hurt my head, right? So don't worry about it. It's basically a fancy half-hour candle chart. You'll learn. if you're interested. I'm sorry your buddy lost $30,000, but I guess it was never his to begin with. I mean, if you make 30 grand and you lose it, that's every chart is an order flow chart, Lurie. Let me educate you. Order flow is a marketing term, right? Order flow is a marketing term. Every chart is an order flow chart. A candle chart is an order flow chart. A TPO or a market profile chart. What do you guys use? Those itchy and scratchy charts, right? Every chart is an order flow chart. What a chart is, it is a record. It's a recording of all the business transactions, right? That's all it is. It's a visual representation of how the inventory of the market is being acquired and distributed. That's all it is. Very simple. Very, very simple. Right? Order flow is a marketing term that these putzes use to get your money. Ooh, this is special order flow software. What a crock of shit. Right? All you need is a 1-minute candle chart, the ability to pay attention, you'll be fine. You don't need to spend a lot of money on special tools, software, all that stuff. It's all a scam. We've rotated around that 7,000. Yeah, that is normal, Blues Queen. It's a very good observation. You know why? Is we are working out 7,000. When you get to a big, big round number like that, there's a lot of people who are buying that level and selling it. So the order flow, right? Order flow just means flow of customers, right? So when we do that, when we come close to those big levels, you have a lot of people with different agendas. Some are shorting it, some are buying it, some are getting rid of their position there, right? Now, this market, ever since New Year, has been a very speculative market. And I kind of told you guys that it would be speculative because all the large businesses, they don't really put their trading plan or investment plan together until probably after the holiday this weekend. So it takes time. In that absence of investment money in the first couple of weeks of January, what happens is the speculators, right? There's a very large speculative um, element to this business because there's a lot of money, right? There's a lot of money going around this business, and there's a lot of very sophisticated, very well capitalized people who actually know their business really well. They know what they're doing, right? They really know what they're doing. And they are in control of the market right now. So what does that mean to us? That means larger ranges, right? It means moves get taken back, right? A move down comes back up, a move up comes back down. That's speculation, right? All right, so say you were short at 89 and you had an 88 bid, right? Say you were short 5 contracts and you put a buy order in at 88. Well, now it printed 87 and 3/4, so you get filled on one. You put your next buy order down here at 87, your next one maybe 86 half, 86 3/4. And if those buy orders get hit and executed, right? Check. This one, not yet. You got to be patient because you got to remember that there are less customers in the store because they raised the margin. So it costs people more to trade, so there's not going to be a lot of people trading. Like, people with the $2,000 accounts aren't going to be in the market because it's $500 to trade a micro, right? So, and 5 grand to trade 6 grand to trade a mini. So there's going to be less follow through, right? And you can tell because the candles are smaller. When you get small candles like this, the business is slow. Small candles, slow business. Bigger candles, more business coming in. Very simple, right? They don't teach you that in the candlestick books, do they? right? With all those patterns and everything, they don't teach you the simple practical aspects of reading a chart, right? The other thing is we know where the sellers are. We know, say it came down under 87 and you didn't get filled. Well, if it stays above 87 and your seller is here at 89 and a quarter, if that seller moves his price up, then you know that the trade you're in isn't working, right? Every trade is a business transaction. There has to be a legitimate business reason for putting on a trade. That's why when people say it's FOMO or revenge trading, I'm like, what in God's name are you talking about? There's no such thing as FOMO and revenge and tilt in regular business. Like if you owned a tire store, right? And you were putting tires on people's cars, and you only had 2 or 3 customers come in, would you burn down the store at the end of the day? No. You ever heard of like a dentist doing revenge dentistry? Well, maybe if they worked for the CIA. Huh, just kidding. But have you ever heard of a baker doing FOMO baking? Revenge baking? It's absolutely ridiculous, right? Think about it and verbalize it, and you'll see how absolutely stupid and inane that is. That's why you guys should not be blowing accounts. If you're blowing accounts, you got to rethink whether or not you're doing business. Otherwise, you're just some drunk guy sitting in a Vegas casino putting it all on red or black, right? But that's your money. You do whatever you want with it, right? But if you actually want, here, London's opening. Let's see what London does. Now, let's see if London takes out this low here, right? Can it take out the low of K? And I'm also looking to see whether these levels work. See, there's a seller there. So we knew there's a seller at the top of these candles. If those sellers see buyers, they will raise price up to here. The top of the candles, my friends, are where the sellers initiate. That's something else that candle chart people don't tell you, right? They want you to memorize 300 patterns, right? You know, but if you're blowing accounts, it just means that you don't know what the hell you're doing. So I'd tell you, please come into our trading room. Even if you come in for a month, right? We only charge $29, and you get our AI for free, right? And our AI isn't junk AI; it's actually programmed, and it's taught from people who actually know how to trade, as opposed to people who were like, I'm an interior decorator, now I'm teaching trading, right? It's just ridiculous. See, you could see if you were long at 89 and you know that there's sellers at 91, go sell some at 90 and a quarter, right? Easy, Alexander. Let's keep it family friendly. Okay, that was funny, but I don't want to get Don cherried, right? Oh, okay. Oh, okay. Good save. Good save. Good save. I don't want to get canceled. Oh, okay. See, now London usually likes to go and take the lower stops, grab some cheap product, shake the tree, and then do this. This time London opened, went down 2 ticks, and straight up. Interesting. Which means when London opened, someone is short and they came in to buy, right? Now, what I've got to think about is in this cost basis, how many people got short here? Are short between 85 and 89? Because if enough people shorted it here, they are going to flip to cover and your target will be VWAP. Remember, overnight inventory was short, so we were expecting a move up. And this is what gets traders a lot. You guys ever notice that, the market will sell off at night and CNBC will be like, ooh, market's in turmoil, market's in olive oil, all of this crap. And everybody shorts the open and then the thing goes higher and everybody gets stopped out, right? That's because of inventory, right? Have you ever heard anybody on these talking heads talk about inventory or cost basis? Probably not. It's the dirty little secret that nobody talks about in trading. Most people don't talk about it because they don't know what it is. And the ones who do know what it is, I don't know. It's almost like, it's like that mafia code of silence, omerta. You know, we don't talk about inventory. We don't talk about cost basis. We don't talk about distribution. Right? Yeah, the old markets in olive oil, right? But just the talking heads on CNBC. Yeah, Monday was a classic example, Raj, right? Everybody's like, "Oh yeah, it's gonna crash, it's gonna crash." And they short the hell out of the lows, and then the next thing you know, short covering rally, right? So we do have sellers at 92. It's a slow night in Walmart. So, the other thing is, and I don't mean to be rude about this, but if somebody, you know, is trying to teach you how to trade, and they're talking about things like volume analysis and looking where the size traders are trading, and they've never been a size trader, there's a 99% chance that they don't know what the hell they're talking about. That's why when you look at all these, like, oh, this tells you where the size traders are putting in their bids and their offers, no size trader is going to show you their hand in business because they'll get eaten alive, right? So, you know, um, they'll come in and they'll go, oh yeah, this is bad and that's bad and we're short. Market opens and goes the other way, right? Right? You'll never see somebody come on CNBC and go, hey, overnight inventory is short, so be careful shorting it off the open. Nobody will say that. Overnight point of control is up here. It's 1,279 contracts. Let's see if we can move that down here so we see good absorption or accumulation. So once you understand where the inventory is and you understand what's going on, now people will go, JJ, how do you know if it's accumulation or distribution? Well, accumulation happens at lower prices, distribution happens at higher prices because the business is about profit, right? I don't see a trade right now. I don't see a trade worth me putting up $600 to trade a micro at this point in time, right? So we have news today, we have news tomorrow. There'll probably be higher margins, and then we have a long weekend. So let's see what happens. If we don't take out 69.83 and you're short, watch your whiskers. If you're paying $100 a month for your trading room, it's overpriced. I mean, we charge $29 a month. That's just so we could, you know, keep stuff rolling. I would love to have a trading room that would be free, but when you have a free trading room, you get every nut job in there, right? You know, yeah, come check us out for a month. I mean, it's month to month, so spend the $29, hang out with me, ask questions, be on the Zooms, right? Today at 11 o'clock a.m., we're doing an execution class, right? And what we do there is we go on Zoom and traders come on there and we talk about execution and we rip apart our execution, right? You will learn more with me in a month than you will in 10 years anywhere else, guaranteed. Because what I like to do is I like to keep it simple. You'll see that there's no indicators on my chart. An absolute novice, I welcome absolute novices. You know why, Mighty One? Because you don't have any bad habits. So I tend to stay away from this kind of chop. We are distributing the product that we bought under 89 at 91. It's not great. I have like 400 videos on YouTube and a ton of videos in the room. Absolute novice has the advantage of not having any bad habits or trauma from the past. So they're more open to learning, right? A lot of the people I have to deprogram, but it's okay. I mean, it's just part of the business, right? There's a lot of misinformation out there. There's a ton of misinformation out there, unfortunately. Because every Tom, Dick, and Harry is out there going, oh, I'm a trading coach. I've seen people charge, $1,000 for this, $800 a month for their rooms. It's just, 10 grand for mentorship. Oh my God. I do one-on-one lifetime mentoring, and that's like as long as you need it, as many times a week as you want to do it, one-on-one. I do that for 3 grand, and I have people who've been working with me for years. You pay one fee, that's it, right? Our room's $29. Clearly, I'm not doing this for the money, right? You know, I want you guys to succeed. There's a reason. Because every time a retail trader makes money, a market maker gets his wings. No trade yet, my friends. And one of the most important things in this weirdo business, which I love, is knowing when not to trade. Because when you overtrade and you trade the times that you're not supposed to be doing business, first of all, you lose money. And it beats the hell out of you emotionally and physically, right? I know traders, when they're down, they start getting rapid heartbeats. They start sweating. They start freaking out. It's hard on you. So we try and take that, and then everybody goes, oh, let's do some trading psychology. Well, trading psychology is useless if you don't understand the business, right? How would you like to go to a heart surgeon who goes, I'm not feeling well right now, I might kill you? It's not really professional, is it? So if you understand what you're doing, you can rely less on psychology for when you really need it. And we like to use trading psychology before you lose money, right? Sorry, Charles. Listen, Charles, we're all in the same boat. Listen, we've all been through the same spanking machine in this business, right? Nobody gets away from it. I've been through it. Everyone's been through it. And if they tell you that they haven't been through it, they're lying. So don't feel bad, you know, if you're having a hard time with this. It's welcome to one of the hardest businesses to do well in the world, right? But if we can keep you from getting stopped out unnecessarily, taking bad trades based on bad business decisions, you're going to be so much further ahead. And when the good trades come, you're going to be actually relaxed, right? Point of control move down. Okay, good. Now we're starting to soak up this overhead inventory down here, right? But the flow of customers, the order flow, right now is slow. Okay, so don't expect much. Might get some nicer moves maybe in an hour or two. Let's see. As more people wake up, right? It's 3 in the morning in New York now. So people are just starting to leave the clubs. Just kidding. I don't know. Does anybody still go clubbing in New York? Or is that all just young kids? So who's making money right now? The wholesalers. The wholesalers who are long here sold here. This move caused price stability and brought in some more buying, right? So now they're distributing here. You can see the distribution, right? Accumulation, distribution, which brings in more buying. Now, we ran out of buyers. So we're going to put it back on sale and we're going to come down into this distribution area. Ten p.m. in Hawaii? Yeah. That would be the time that I used to start work when I used to work at the Wave on Kalakaua. I don't know, it might be before your time, Cisco. It was a nightclub on Kalakaua. It was called the Wave Waikiki. And I worked the front door when the bouncers, because I was young, and I worked out in the same gym as the guys who worked there. So when they wanted a night off, they'd go, "Hey kid, cover for me." Oh, it was good times. See, we couldn't take out really the low of K period there. So if you look at the chart on the right, you'll see A, B, C, D, right? Alphabet traders, right? All we're doing is we're giving a name to each half-hour candle. That's all it is. So we could say this happened at A period or B period or that kind of thing. That comes from Chicago. Oof. It's like watching paint dry, isn't it? But at least you know when to do business, when not to do business. Now, how do you make money in a market like this? Well, how good are you at building a position? So first we teach you how to scalp, how to trade quick. So we develop your reflexes and you know how to think and react quickly because you're going to need that when you're building a position. So when you go to build a position, say you were building a long position here before this move up, right? Say you were building a long position in this area. Most likely this candle would have caused you a lot of stress, right? So you'd have to, you'd have to build it. I love to build a position after a big break because it's kind of flushed the market out. You could maybe start here. Now this is hindsight, so it's 2020. In real time, you might be building, get stopped out, and then start building again, right? And you build a position, these are your warnings, and then you'd put your sell orders out. So as soon as the market went up, you'd be coming out of your position, which is what the wholesalers are doing right here. A little bit more difficult. You got to put on some size, and you got to manage that size. You got to manage your risk with size. In a choppy market, it's hard to do as a retail trader, right? The problem is if you were building a position and you were long 5 contracts and it came down here and you cut 3 of them and then you added 3 here, that's a business expense. Now, can you afford that business expense? If you have a smaller account, you can't, right? Just like Walmart can afford larger business expenses than a mom and pop store, right? That's just economy of scale, right? Sometimes when a market's really choppy, it's just best to go get a coffee, go to the gym, you know, take the dog for a walk or cat. I don't want to discriminate. You know, I see people walking cats now. So that's basically what we're doing, right? We come in, we assess the situation, we're all ready to go. So when the trade presents itself, we're ready. What's the trade we're looking for? Well, the look above and fail is kind of choppy here. If we get better order flow and the market comes under 85 and comes back up, we'll go long, we'll put our stop here, sell some here, and sell some here. But right now, the flow of customer business doesn't really support the type of business that we do at this time. But that will change. That's the good thing about markets. You don't like the price action? Give it a couple hours, right? We'll get some new folks into the store, right? I'm hyper focused on 69.83. And I want to see the trade that I would love is the trade that we had in M period yesterday where we looked below it and came back up, right? But if these lows hold, we will get that over the course of this Globex session. You guys have any questions? Now, this type of analysis works on anything. Here, I'll show you. So here's the SPY, right? The SPY ETF on the daily. You'll see I had a cost basis here. It's not established it's established a bit earlier than November. So you'll see that the levels work really nicely. You get a cost basis, 2 times profit, 4 times profit, 8 times profit. And you'll notice, you know, the highs yesterday was 69.0609. My level is 69635. So you could see it can really help you. If it stays over 86, your target is 96. If it looks above 86 and fails, your target down is 77, right? It works for everything. You know, NQ as well. See, NQ, you can see where the sellers are. You just mark the top of the candle so you know where resistance is going to be. Now, why are the sellers there again? Well, because they're size sellers. And if they sold there before, you could be damn sure they're going to sell there again. And if the market can't get to that level, it means they're front running that level, which means you're looking for a little lower. See what I mean? It's all about market intelligence, right? If you have market intelligence, right, there's a cost basis on a weekly times 2 times 4, right? Works on everything. Here's silver. You know, silver, your cost basis is down here, 26 to 34. We are in 8 times cost basis now, trading in the 89s, right? So it works. It works on stock. It works on futures. It works on currency. Because everything is a market, right? Until they start calling it the futures hot tub, we're okay, right? Remember what a market is for, ladies and gentlemen. It's for people to bring product in and sell it at a higher price. And if they can't, Well, they're going to have to put it on sale. That's it. Real simple. All right. So I'm starting to fade. Energy's starting to dip. Does anybody have any questions? Just expect this choppiness, right? Remember, they raised margins, so they kind of, daddy took the credit card away, right? Okay. The 2 ticks of excess. What excess is, hang on a second. Let me just, good question. This is a market profile thing, okay? So the guys who invented market profile, they say you need 1, 2 ticks at the bottom to be considered a proper low. This is excess, but it's not meaningful excess. This is meaningful excess. Now, what is, as opposed to what? A poor low. A poor low is a double bottom, right? Or 1 tick of excess. And all that means is that the buyers are competing here and they're not allowing the market to go lower. Now, it's not that they're not allowing it. Let me rephrase that. When the sellers get down to this level, they look at it and they see, pretend it's like a glass door. And if you're a seller and you got 500 contracts for sale, right? And you see people lining up to get into the store, you're going to raise price. That's all it really means. Right? That's the practical use of that. Now, if you go into a market profile teaching classroom, they will go around and around the mulberry bush talking about poor lows and poor highs and excess and all of that, but they won't tell you what it means to you. So the thing is, when you see a couple of ticks like this, or a poor low, or a double bottom, don't short that. It means that the sellers have seen buyers and they're raising price. So you want to be going long off of that, putting your stop there, and riding it up and selling into that. You sell into the strength, which is caused by a lack of supply. Right? If you have a poor high, like we do here, that's a double top. That's a poor high. Poor high tells you that the sellers are competing at this level. So when they're competing at this level, you short this level, you put your stop there, and then you put your buy orders down here. You see? So when you see sellers competing, you short. Because they're going to lower prices to get rid of their inventory. Right? That's like when Walmart competes with Costco. Right? The TV's $1,000, right? They're both selling it at $1,000, and then Costco lowers their price to $900. Walmart has to price match, otherwise they're holding inventory that people are going to go to Costco, right? Same thing. So market profile is a wonderful tool. Unfortunately, nobody teaches how to use market profile in a practical manner, right? So the most important things about market profile is inventory, poor highs, poor lows, and something called single prints. And of course the stops, right? Where you could clearly see. Single prints happen between distributions, like here. Right? These are liquidation single prints, so there's inventory trapped long here. So when you get up here, you know that there's going to be resistance. That kind of thing. Very simple, and we go over that in the room over and over and over again. It's a little weird because nobody really talks about this stuff, but, we'll take you through it, and, we'll keep it simple, right? So as you can see, you could use this method of keeping track of inventory on anything. So there's ASML, There's crabapple, right? You know that there's selling in crabapple at 261. That's why I can't break that level, right? Because inventory is trapped long above it. You see? All of these people are long, so they're creating resistance, right? Very simple. You can see the cost basis of Apple here, short term. There's the distribution, put it on sale. If it gets really bad, it'll come down to 245, right? You could use this on pretty much any instrument. There's gold, right? There's silver, the ETF, right? Good old Tesla, right? It works on everything, right? And very simply, this area, that's a cost basis. So the market went up, distributed, came back to the cost basis. They stopped selling, and they raised price again. Practical information, folks, right? Very practical, simple, and we base our trades around that. Alrighty. Thank you for being with me. Sorry, I sound like Donald Duck with this flu. Oh, trying to get it to dry up. Ugh. All right, folks, we'll see you at 9 o'clock Eastern Time for our next session. I'm here every day, 7:30 in the morning UK time, 2:30 in the morning for my New York insomniacs, and 9 a.m. Eastern Time for the pre-market open. Thanks, Badir. I'm going to go crash. We'll see you all in a few hours. Thanks for being with us. Come join us at the Trading Syndicate if you want to learn how to make some money, simplify your life, you know, and cut through all the BS, right? We'll teach you all the dirty little secrets. Hey, Risco RSK, welcome to the room. Thanks for joining us. We'll see you guys. Stay out of trouble and don't take candy from strange market makers. Thank you, everyone. Bye for now.